Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. Abel Pacheco here. I'm the president of Five Talents Commercial Real Estate. This is the Five Talents podcast, and we're just super excited. We have an amazing guest for you today, Mr. Dan Handford. So I'm going to say your bio, and I want to kind of read through this stuff in a minute. But Dan, how's it going, man?
It's going very well. I appreciate you having me on. Looking forward to sharing with the audience here.
Yeah, thank you very much. I know you're going to bring a ton of value to listeners or people watching this on YouTube right now. And so I'm excited to jump in. So Dan, if I can, let me cover a little bit of background, what I know about you, you and Danae. You know, you guys have 4 children, three girls and a boy.
That's right.
A standard poodle. You guys live in South Carolina right now?
That's right. Columbia, South Carolina.
Oh, that's awesome. And so Dan, you are the managing partner of Passive or one of the managing partners of PassiveInvesting.com. So it's a national passive apartment investing firm. You guys are based in the Carolinas. I know you know, from the couple of years that I've been following you, you've led a ton of apartment syndications. You guys have acquired like 2,200 units, and your portfolio value is $274 million. Is that right?
That's right.
Oh man, you guys have had a ton of success. I'm excited for you. And I know that you're also a passive investor in about the number of units, 4,800 in 21 different syndications. Is that also right?
It's a little bit more than that one. So that bio might be just a little bit outdated. So we're in now 26 between my wife and I are both invested in 26 different investments passively. And all but one of those are multifamily. The other one is actually a food hall out of Nashville, Tennessee. But 25 of them are all in multifamily, and it's with 9 different operators as well. So a lot of people think it's just one person or whatever, our own group, and it's not. It's actually quite a few operators as well.
That's the beauty of multifamily, diversification of other people's knowledge, time, expertise, and their markets. It's awesome, man. Congrats. And so I heard you talk on more than a couple of podcasts. I met you at Kingdom Capitalist. Well, not that I met you there, but you are an advisor for our group. But I heard you on, many multiple podcasts. You've got an extensive background. You started really 7-figure businesses even prior to multifamily, and you started those from kind of like the ground up. Something about non-surgical orthopedic medical clinics, also in Carolina. So,
Right.
Just a tremendous background. And so I think who I originally found your name way back then was MFIN, Multifamily Investor Nation. And you were, kind of the leading, person, when I think in 2018, maybe I was like looking around and I saw that you provided free multifamily education. You did that nationwide. There was like 26,000 members. So all these multiple meetups in 50 states. And that was, something you guys did and I think still do today, right?
That's right. We still do.
I see your post and I so busy and scheduled. It's hard to catch everything right now, but there's a ton of content that you pushed out. I've watched, more than a few segments on raising capital and, building businesses and, all kinds of great content. But so I know you have one of the most popular apartment investing podcasts as well. So Multifamily Investor Nation, if you guys are looking for a source for additional content, education, and knowledge in multifamily, you need to go there. It's just really, gets down to, learning, not a lot of fluff, multifamily podcast. And you kind of even help with a lot of the nuts and bolts deal sourcing, financing, structuring, investor relations, due diligence, all that stuff on mfinpodcast.com. So how long have you been doing that for? When did that actually start?
Yeah, it actually started in January of 2019. So we're
Mhm.
coming up on about a year and a half now of doing that podcast. In January, it'll be 2 years. We actually launched it at the very first Multifamily Investor Nation Summit that we did. So that was
Oh,
the
okay.
first one we did was January 2019, and we launched the podcast there.
Yeah. So your original platform, I guess that I found you was like meetup.com, and that was there. But the podcast is newer. Maybe this is a great starting point, Dan. So I know you've raised a
Yeah.
ton of capital. We just talked about some of these stats, which are, it's a little hard to wrap my head around it. And I bet you for some new multifamily, investors or passive, and also general partners, it's like, yeah, these are numbers are so big. You are great at building platforms. You're great at building, these, systems in a sense. So maybe you can walk us through like, some of the major platforms that you have today and just kind of how you started those. That'd be awesome.
Sure. So how much time do we have?
I set the time. We got 35-ish minutes, but however much time you want to take, I'm happy to go over, man.
Yeah, so I'll kind of start off in the very beginning, what I got started with first, because I know a lot of people when they think about this, they get overwhelmed by just so many things that some people are doing, and you just need to learn to just break it down and start with one thing first, but just don't stop there, right? Start with one thing and start to add on. And that's what we did. So I started out, and I'll even get a little personal with you, okay? Because I actually relax quite a bit when the kids are in bed, my wife's already usually in bed, and I'll my mind will be racing. So I'll actually go get in the hot tub, actually. So I get in the hot tub, just
There's
sitting
a
back,
picture.
relaxing. It's just the way I kind of unwind. And it's also where my creative juices just start get flowing too. So I'll listen to podcasts or audiobooks or, different things like that and watch YouTube videos and really kind of just have an opportunity to kind of have, I guess, some creative time. Right. And so it was actually in the fall of 2018. Actually, it was more like, I guess it really would be the fall of 2018. It was like August, September of 2018. So about the same time. Right. And I was sitting in the hot tub and I was thinking about the whole, what can I do to create an authority platform to be able to, start to increase my awareness in the market. Because I know you've probably heard me talk about this before, but there's a triangle that I talk about called the Investor Triad. And there's three important pieces on each one side of those triangles, and it's know, like, and trust. And a lot of people think that the most important piece of that is either that they need to like you or trust you. And really, it's about getting people to know you. Because if people never get to know you, and they never have an opportunity to create an opinion as to whether or not they actually do like or trust you, right? And so you really have to focus on that. And that's what I was doing, is I was focusing on trying to figure out what can I do to be able to increase my awareness and branding on, getting people to know me. And I don't remember what I was looking at or researching. I think one of the things that I do to get a lot of ideas is I look at other industries and kind of see what other people are doing in other markets.
Mm-hmm.
And that's what I did here is I can't remember where it was, but I remember, uh, researching a different market and thinking about like this whole, like, nation type, like branding ability. And I just started going on to GoDaddy and I was just like, all right, apartment investing nation, apartment investor nation. And actually Multifamily Investor Nation was available on as far as the URL. And I was like, that's what I'm going to do. Multifamily Investor Nation. So I bought the .com, the .net, the .org, everything I can get.
Yeah,
And then
all the
I
way
was like,
around.
if somebody could actually steal this from me, what else would they do? Apartment Investor Nation. So I even reserved apartmentinvestornation.com.org.net. So just to make sure I had all my bases covered. And I really started it off by just starting using Meetup, the Meetup platform.
Mm-hmm.
And one of the things about Meetup is that, and now with COVID, it's a little bit different because now you can actually do webinars every single meeting if you want to, because it's all pretty much virtual now with COVID-19. But back then you couldn't do any more than about like one a month of or no more than like 10 or 15% of your meetings could be virtual. So you had to really have somebody that was doing live in-person events in order for you not to get kicked off of Meetup. And so I was like, well, what can I do? What can I do to be able to create a brand about this multifamily investor nation and have, people that can actually meet in person and meet up around the country around multifamily investing. And so I started to find and network with people that are in these various markets. And of course, called a lot of people and tried to connect myself with a lot of people in these major markets and say, hey, who do you know that will be interested in helping me with this? And started getting, 5, 10, 15 groups with an actual co-organizer in those cities, and started to be able to put events together. And we try to do it really nice for them. So we have these really nice name badges for each one of them that talks about, so they can wear it at the event. And we, in the beginning, I was thinking about how can I really syndicate myself. I don't mean like syndicate, like sell myself, right? But,
yeah.
Really kind of broadcast my own self at each one of these meetups. And so I was thinking about possibly syndicating like a show where I would actually teach people live in person. The co-organizer would be there for the after questions and answers or the networking piece of it. And then that idea fell through because the technology hurdle was just so high. You would have to have, you'd have to pretty much buy, or the co-organizers have to buy a projector and have a good enough TV screen. And then you have to go to a place that actually had internet connection. So in order to syndicate this thing, right? And so I decided that just wasn't going to be feasible. So I opted not to go that route. So I thought, well, what other way could I still be providing value? Because really the value for the meetup groups was that I was doing I've been doing weekly webinars, free weekly webinars for, around the same time, going on 2 or 3 years now. And so that was a way that I was able to increase my own database and list, was being able to send out an email through Meetup to all the people who are Meetup members, a part of our network, and being able to get them to jump on a webinar. Well, when they did that, I got their email, they're on my list, and you have another way to be able to communicate with them outside of Meetup. Mm-hmm. That was kind of my main platform for that. And so just started to build it up. And so now what I do is a week before each meetup, I get all of my co-organizers on a Zoom meeting, and I teach them about the content and the topic that they're going to be teaching about the next week. And so I don't charge them for it. So it's all free. They don't get charged for it, but I'm providing value to them, and they're providing value to me. It's a great symbiotic relationship. And the groups have continued to grow. And now I think we're itching about 30,000 members now across the country, across all the platforms. And we have 53 meetup groups, including Canada, where we have people that meet on the first Monday of every month. Man. And they get together. And right now it's been virtual because of the whole COVID-19 situation. But sure. That was the main way where I got started to begin with, and then tacked onto it the weekly webinars that I was doing, and then started an online Facebook group that has quickly grown really fast. And with the Facebook group, I really have kind of cultivate that, meaning that I don't let everybody in. Like I ask like 3 or 4 questions in the beginning. If they don't answer those properly, then they don't get invited in. They don't get accepted into the Facebook group. So I've tried to curate that pretty well. Versus some groups you might see 20, 30, 40,000 people in them, and they're just pressing accept to everybody who comes in, or not even vetting them at all. So you get a lot of spam. And so you go to our group and there's not a lot of spam at all. Like we try to keep that out of there. We have one post every week that's like our self-promo post. So if somebody does have the itch to promote themselves, then they can just do it on that one post instead of having multiple posts that are taking up people's feeds, and they get bored with it and they, leave, or they just, start to unfollow it. And then from there started the Multifamily Investor Nation Summit, actually, the MFIN Summit. And then when I started the MFIN Summit, I started the MFIN podcast. And of course, the summit, the very first one we did, we had over 500 attendees. The second one, we had over 600. We had over 800 in January, and then over 800 in the June one, this past June. And then coming up in January, we're hoping to hit that comma mark where we get over 1,000 people to that event. So we're working very hard to do that. But that's just kind of been the progression of how we've grown that. And then the MFIN podcast, it's a weekly podcast. So, and I honestly have not been very consistent with it because I've done a lot of the podcast, but over the last couple of months, it's just been so crazy busy that I've been lax and recording some of those podcasts, but it's still the #1 multifamily podcast on iTunes. So if you go to iTunes and type in multifamily, we're in the #1 spot. in that podcast. And I think it's primarily because we don't just interview a bunch of, interview a bunch of just experts, right? We really try to only interview people who have closed a deal, a multifamily deal within the last 12 months. We get down to the nitty gritty about what actually happened with the deal, how they found it, how they sourced it, how they financed it, how they worked with investors, how they structured it with investors, and all the different issues that came up during due diligence and the rest of the process, and what they found was easy and hard, and really get down to the nuts and bolts. And that's really where people learn, is when they listen to that kind of a podcast. And I get so much good feedback from it. And I'll tell you, it's not always about the reviews. Everybody always thinks, oh, you got to get these ratings and reviews. Well, we have probably the fewest number of reviews on multifamily podcasts, but we're in the number one position. So the metrics are not always just related to the ratings or reviews. It also has to do with the back end of how many people are actually subscribing to the podcast and are actually subscribed and downloading it every time you release an episode. And so it's important to have a good quality content all at the same time. And so that's kind of in a nutshell what we've done as far as all the different platforms. Oh, and we also have the YouTube channel. So I can't forget to mention that. And we've just recently launched an MFI and premium program, which is a very low level, kind of entry level program to give a lot of education from A to Z around multifamily. And then we also have some MFI and intensives that we've started to do, which are live in person, very small curate events, 20, 30 people. I don't have any desire to do large in-person events. And so I wanted to be able to have smaller events, and people come to Columbia, South Carolina to have those events instead of me having to go travel somewhere else and inconvenience my life and my wife and my family and stuff like that. If they want that content from me, they can come to Columbia, South Carolina and enjoy it. And you can even come over to the house and we'll play some ping pong and get in the pool and maybe just go to the four-wheelers in the back of the yard. So
here we go, man. So there's a lot to dig into, and in a couple of follow-up questions here. So you built the meetup platform, you built the podcast, you're doing the weekly webinars, you are doing your summit, you're in person. Now they've gone to virtual. Now, all of these things, right? And if I'm a new syndicator, new operator, I'm trying to figure out how to raise capital as well. I go, okay, I need to start somewhere. I need to start on this one thing and then just kind of layer in slowly. I think a fear or a worry or like one of the things that people shrug their shoulders at is they go, well, they look to somebody like you and see you dominating in a lot of these categories, and they think, I don't know if I'm going to start a meetup, or I don't know if I'm going to launch a podcast, or I don't have any value. I'm not going to do that. What would you say to that individual that's saying, you know what, should I do like one or two, or how, is this even worth it for me?
Well, I would say, yes, it's worth it to you. I'm not ever afraid of competition, right? I mean, there's definitely other people in the market that do something similar to what I do. I feel like there's certain things that we do to kind of stand out. But if you're first getting started and you don't really know where to start, first thing is to ask yourself, what do you like to do, right? So if you like to write, well, maybe you want to start with writing, right? Maybe go write some blog posts, go write some articles, go or like LinkedIn articles, or go onto Bigger Pockets and start to respond to some forum posts and write. Okay. I actually like to do a lot of different things, which is why I do a lot of different things, but that's not how we got started, right? We even have, for our own investors, we have a printed investor newsletter that we send out to investors, and we actually write articles for that. We go on to Bigger Pockets. We do that kind of stuff. We do LinkedIn, but when you're first getting started, you have to ask yourself, what do you like to do? What are you really gifted at? Do you like to write? Go do that part. If you're really good at speaking, but maybe you don't like to be on camera, well, maybe do a podcast, right? I know a lot of podcasts now are, on video as well, but do some like audio stuff, right? Mm-hmm. Even go see if you can get some local radio interviews. There's a lot of things that people don't think about that are more outside the box. Like when I first got started, one of the ways I got some of our investors is, instead of always going to real estate podcasts of being interviewed, I went to business podcasts, because there's not a lot of people there looking for investors for real estate, right? But I can go there and tell my story and share my information and tell them how I'm now into real estate, and it sparks interest from a whole other audience that people in the multifamily space don't even think about. So we have to start to put yourself in a position to be able to think about things that are outside of what you're currently doing, where you can actually bring people into the space instead of always just trying to go to a market that's already saturated. And then same thing, if you're somebody who likes to be in front of video, or like in front of a camera and do video, then do video podcasts, do video YouTube videos and LinkedIn content on YouTube, on LinkedIn videos, and then Facebook videos. The biggest thing with the videos though is don't just post them on YouTube and then share the link on Facebook and share the link on LinkedIn. You want to do a video and then share it. Don't share it, but actually natively post it on that platform, because it'll actually get more reach and more visibility as well. So to get started, you just have to figure out what you're really feeling like you're really good at and gifted at. Start there first, and then just bolt on everything else as you move forward.
Yep. Take it one step at a time. If you like writing, then write, right? And now let me circle back around to the Investor Triad, because I've been saying this more often, and I know I heard you say this at our mastermind as an advisor, and you asked the question, hey, what's most important? People know you, like you, and trust you. And I've been an IT sales professional for 13 years, prior to commercial real estate. And I told this to my sales teams. I had, 60-person sales teams. I go, man, people, it's an old school lesson in sales. People buy from people they like, and they like, know, and trust you. They're going to do business with you. But when you asked me what's most important, I've always had this mindset where they trust me is the most important factor. They could not, disagree with some of the things, and I don't really like that guy, but you know what? He's trustworthy. And so my character, integrity, those are the things that I've always pushed for. You put it in a perspective and you said, hey, if they don't know you, how are they ever going to like or trust you? And that was a big, big kick, encouragement, or whatever you want to call it, to say, let's get out there and let's get more visible. And, I'm trying to do that, exactly what you're saying. So I'm
and at the same time,
your Investor Triad.
Yeah, and at the same time, we're not trying to diminish the fact that you don't need to be trustworthy. I mean, you definitely,
still
that's the thing is, that's why it's called a triad.
Yeah.
That's why it's called a triad, because you have to have all three, right? Mm-hmm. But the first entry point into that triad is getting people to know you, right?
Yeah.
And once they get to know you, then they have that opportunity to make an opinion as to whether they like and trust you. What some people don't think about is that it doesn't just stop at trust. Like, it's not just know, like, trust. It's actually know, like, trust, and then know. And that what they're doing is they like you and they trust you enough that they refer more people to you, so you get to know more people, right? Yeah. So it actually is a cyclical pattern that happens, and it can be an exponential benefit as you move forward, and you can start to fit each one of those points of the triangle.
Yeah, we've had more than a few investors on our current projects that end up referring their friends and their partners, and that's they knew, like, and trusted us in the first place, and then here's another referral, and we end up working with new investors, and that the referral part is so key, and that's the integrity, the character part, is delivering on what you're promising, right? So in terms of capital now, man, the numbers are astonishing. For a minute, it's hard to wrap my head around how big that is. You raise how much, like, on a let's just say in a year, how many new deals are you doing? And maybe even just pre-COVID to today, like, I know it's probably maybe a little different, but how many deals or how many doors, or what's the volume like on a yearly basis? And then how much capital is that you're raising?
Yeah. So typically we're trying to put together between about 4 to 7 deals. Mm-hmm. And, in the beginning we were going after some of the smaller deals where we were looking at, doing, 10 million and under 10 million, like $5 to $10 million deals. We did one deal of that size, and then we went to, 14 million, and then a 16 million. And then fast forward to today, we're doing the last 2 deals we did were close to 50 million. So actually one was 51.5, and the most recent one we did in the middle of COVID was 49.955 million. So raising anywhere between about 35 to $50 million a year.
Yeah. And do you do Regulation D 506B investments or C investments, or mixture?
Yes.
Or yes,
we're doing a mixture of both of them. So 506 Bravo and 506 Charlie.
Okay, awesome. And for those that are maybe passive investors listening in, a B investment is one where you have to have a pre-existing relationship with the operator, the syndicator, that team. And then a C, if you are an accredited investor, you can basically, I don't have to have a pre-existing relationship. Dan and, I could advertise and put it anywhere, and you guys could log in and just, wire some money. And that's, kind of the primary differences. There's other intricacies, but one, you can advertise, which is the C, and a B, you have to have an existing relationship established. So how in the world do you kind of establish like for the B investments? What's the operations of that? Like to just meet a number of people and say, over the years, hey, this is how I do it every day, every week, every month. There must be tons of people contacting you today. How does that even work? Maybe give us a glimpse.
Yeah, today's been a very busy day. So Tuesdays and Thursdays are my days I kind of block off because I time block my time for investor phone calls. So I started at 9:00 this morning, and I'll finish up around 5 today as well. So and then just having those interactions with the investors. So the investor goes to our website, my assistant will reach out to them, and she will call them to schedule them to have a phone call conversation with me. And so the whole point of the prior existing relationship is to have multiple touch points, right? And there's no rule of thumb, or there's been no SEC document that says you have to have at least 3 or 10 or 30 days or anything like that. It's just you have to have enough of a significant relationship with them. And there is a document that the SEC released of a group that actually said, hey, can you review this to see, is this okay, to be able to establish the relationship? And there is multiple touch points in there. And that's what we try to do. We try to have multiple touch points with our investors. So I'll have a phone call. First, my assistant has a phone call with them. Then I have a phone call with them. Then we mail them a newsletter. Then before we even put them on the mailing list, we'll send them a newsletter. Then we'll also, and it's a mailed newsletter, not just email. It's a mailed physical newsletter. And then we will also, I'll send them a text message with my contact card. And then we'll also send them an email with our most recent offering so they can see how we structure things and how we put things together. And I always tell them this offering's closed, so we're not trying to pitch you anything, but it's just an example deal so you can see how we structure things and how we put them together. Mm-hmm. And I can ask me any questions after that as far as that's concerned. So we've got 5 to 7, sometimes upwards to 9 or 10 touch points, depending on how many interactions you might have with them after the fact. And so we're building those relationships with those investors that way. And we tag them inside of our CRM so we know that we have those touch points. And when I jump on a phone call with an investor, I pull up the CRM. We use Active Campaign, and I'll actually make notes on that phone call. And I do that for multiple reasons. One, for compliance reasons from the SEC standpoint, but also for me to be able to, if I go to a city, I say, Tampa, Florida, and I want to visit with an investor down there, I can pull them up in the CRM and see the notes that I had with them. So when I meet with them again, I kind of already know about their background and whether they were in accounting or finance or real estate, or maybe they're a physician and they work on the ER. And I remember, they think I remember all that stuff, but I put it all in my CRM so I can review those notes before I meet with that investor again.
Yep. That's awesome. Hello. You're listening to the 5 Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you've subscribed to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review, and we're going to send you a free copy. So thank you so much for subscribing to the 5 Talents Podcast. We really appreciate it. And so for any general partner, operator, capital, raising partner, these are the nuggets that I think you're, looking for, searching for. You're trying to create that platform to drive awareness. People know, like, and trust you. They reach out. We want them to reach out for a number of reasons. Dan has created all of these reasons for them to go to his website, register, and be a part of that, ongoing newsletter, or, whichever platform it is. And he consistently feeds into that. And I've gotten education. A lot of people have gotten a lot of great education along the way. So it's very much a virtuous cycle for his investors, because as they consume information, knowledge, and education, they're more empowered, they're more confident, and then they can move forward on, Dan's next deal, and they get better returns. And Dan, goes full cycle on a deal, and money's back in my hands. I can go invest again. So it's a huge virtuous cycle. And if you're a passive investor, maybe Dan, so let's spend a few more minutes on your passive investing. So, Dan's an expert on the front end. Man, Dan is also a passive investor. So it looks like maybe double the amount of units, 4,800, or like you said, more than 26 different syndications that you've invested.
I'll pull it up for you. Let me see if I can pull up on my screen here. We're at 5,762. How about that?
Holy moly. So all of the, probably active capital is probably a great way when a deal goes full cycle for you to invest in another syndication that drives tax losses, tax benefits, and avoids the gain on the sale. And so you're a passive investor and you build that up. Let's talk about maybe an advice point, or some advice, a point for passive investors. Abel's new. I don't have a lot of, not as much track record as you. We're in 800 doors and 5 apartment complex, versus, somebody like you that's done over and over and over again. How do I determine the difference between, these two teams? And I don't know who to invest in, and maybe just give a little advice for the passive investors that are listening.
Yeah, I mean, this is one of those things I've been working on for a long time, because we've been doing this for a couple of years now. And there's definitely some red flags that I would definitely watch out for when you're trying to vet another operator or a syndicator or sponsor, whatever you want to call them. And for me, one of the biggest things for me is I want to make sure that there is somebody on that operations team that has some form of background in business. And I don't want to just be any background in business, right? Because I know there's some people that know how to run a business, but they also know how to run it into the ground, right? I don't want that kind of person, right? I want somebody that has a successful background in business. And because at the end of the day, what we're buying is a business that just so happens to have real estate associated with it, which is really nice, but you have to know how to manage people. You need to know how to put in systems and procedures and processes in place. And you also have to be able to know how to measure things, because you can actually manage them properly. And you can know how to pivot when necessary, especially when you have like black swan events like COVID-19 come about. You need to have somebody at the helm that can actually make some decisions and make them swiftly enough so that you can pivot before things are too late. So that's one of the biggest things that I look for. And then, of course, I look for projects that have preferred returns. So I feel it's a big alignment of interest when there are preferred returns on a project. And I also want to make sure that the investor is full-time in the business. So I don't want to have somebody who's trying to hold down a corporate job and also be the main operator on a deal. I've known too many of those types of deals that have gone south because that operator is treated as more of like a nights and weekends hobby instead of a full-time business. And I've worked hard for my money, and I know my investors have as well. And I want to make sure that they have full-time efforts managing their assets, right? And so not that there's anything completely wrong with it. It's just, I just don't feel like, I think it's too risky for me to put money into that kind of an investment when the operator is not full-time. And that doesn't mean that somebody can't be part of the team that's not full-time, right? They can be a different co-partner of some sort or some form or fashion, but I want to make sure I have a part of that team that is actually full-time watching that investment on a regular basis. And then of course I like to see monthly returns. So instead of waiting for quarterly returns or waiting for, I actually just talked to somebody earlier today, and they're waiting 18 months to see their first return. And I prefer to see returns starting to come out in the very beginning, right after we close on a deal. So we closed on a deal earlier this year in May. It's in July we made our first distribution, right? And it's not that you can't necessarily do that kind of thing when you do a really heavy value add deal, because the cash flows are usually so tight you don't have the money to do that, right? So it makes it a little bit more challenging for me as an operator to find a deal that actually makes sense and actually works, because I want to be able to make those distributions on a monthly basis, and I want them to start right when we get into the deal instead of waiting, a year to 2 years before the cash flows start to stabilize. And so those are some of the main things that I look for. So, and when you're looking for other operators, I would suggest you kind of look through those same things. And then I guess I would say finally, number 5 would be skin in the game from the operator as well. So you have that kind of alignment of interest with the investor where they're putting in at least a certain amount of money. I prefer a minimum 100,000 from the operator, or at least, or not, or up to 10% of the equity. So our group typically puts in about 10% of the equity. And I know there's been some other operators that I've invested with where they've put in like $100,000 or something like that as like their minimum investment that they'll put in. But I want to see some skin in the game with that operator. So I know that they're not just watching over my money, they're also watching over their own money as well.
Yeah, those are all great points. Passive investors, you guys have worked very hard to have this capital to invest in, whether it's your 401k that you're directing into an IRA into the deal or cash. It's taken you a lot of years to kind of amass this amount. So I'm putting together my first like ebook guide to investing, and I'm calling out a bunch of questions to ask, active versus passive, and trying to put that out there as well. And I started as a passive investor. Those were my first 400 doors, and me and my wife. And so I can definitely understand exactly what you're saying. Is we work hard for it. We want to make sure we keep it. Right.
That's right.
That's great. Well, so from a passive investing standpoint, maybe you can give us a little bit of your end goals. I don't want to say end, but let's just say over the next 5 years, even that's probably pretty far out. Are you going to continue pushing, more deals as a general partner, as an active partner, and you don't see a stop to that? Or at some point you're just, going to stay 100% passive? Or what's the, what do you think your 5-year roadmap is?
Yeah. I mean, I think for the time being, the goal is to be long-term with this, right? We're not trying to create a private equity real estate firm to do a few deals and then go away, right? We want to be able to grow our wealth alongside of our investors' wealth, and we treat our investors like people, not just a number. And so our goal is to continue to grow. We're on a road to $1 billion is what we're on right now.
On the road
So
to
over
$1 billion.
the next
That's a goal right
over the
there.
next 4 more years, we want to get to that $1 billion of assets under management, and we're well on our way there. So we've obviously, with COVID-19, put a little bit of a damper in our numbers for this year.
Sure.
Our goal this year was to get to close to 300 million in addition to what we already have. And so far we've only done 1 deal because of COVID. So we had 2 other deals one was awarded to us and one was about to be awarded to us when COVID hit, right around the same time we got that first deal. And we had to back out of both of them just because the debt market changed and the treasury changed, and there was just so many unknowns to those. So we've only closed 1 deal. Now the 1 deal was, a nice, $50 million deal, but we are still underwriting deals, still looking to put more deals together. And we're, optimistic that, we'll be able to put 1, possibly 2 more deals together between now and the end of this year. And then maybe possibly sell one of our assets as well between now and the end of this year too.
Yeah. You've got just a furious pace, man, getting after it, you and your company. So give us an idea of like how large your team is, how large, like today, maybe even like talk about your first deal compared to like now. Was it you alone and you partnered with other individuals, or did you create the company right off the bat and start with multiple people? And what was the transition like?
Sure. So when I first got started, I was when I first started doing it on the active side. Obviously, I passively invested first, which I think everybody should do.
Mm-hmm.
But I actively invested after that, and I co-GP'd with other people. And that was before I had really anybody else as part of my team. But then started to network with other people and get to know people, and talked about what I did, what I was wanting to do, and was doing right then with everybody. And that's how I found my other 2 partners. So my other 2 partners joined us, and before we closed our very first deal that we put together ourselves, they were already part of the group, right? And so it was really just the 3 of us that were putting things together. And then as we started to close more projects and more deals, we realized that we really needed to start to build out our team. But from the very beginning, all 3 of the partners, basically we told ourselves that, listen, I'm not trying to create this passiveinvesting.com group so that we can create another job for ourselves, right? We still wanted to truly be passive as well, as much as we could. And so we were on a path, and we still are on this path of making sure that we can get to the point of being passive in this this business as well. And so, and the only way you can do that is what we're doing is taking those asset management fees, instead of taking those and putting them in our pocket. Those asset management fees are actually used to pay for our staff and our team, right? To be able to help support the properties. And so we have in addition to the three partners, we have an analyst, we have a director of asset management, we have a director of marketing and PR, we have an investor relations person. And so all these fees that are coming in, we don't put them in our own pocket. We do it to grow the asset management team, to be able to help to grow the organization. And I know that as we continue to grow and double our portfolio, that team size is going to grow as well.
Yeah.
And we want to make sure that we're prepared for that and be able to grow our team to make sure that we can have enough people to take care of and properly manage the assets that we have, because we do have a lot of investor money that's what we're responsible for. And I've had a lot of people ask me, how can you sleep at night knowing you have, how many millions of dollars of investor money? And at the end of the day, I sleep really well at night. I mean, I have really good sleep. And it's because, number one, we buy good quality cash flowing assets that we know are going to be good for the long haul. We buy those in great solid markets that are continuing to growing and are stabilized by blue chip corporations. And we have a good solid team that's actually managing those assets.
Yeah.
And that's how I can sleep well at night. But if I was just buying some poor quality assets and always just trying to turn them around and, always trying to, have different moving pieces and parts and stuff like that, and not really being confident in those assets, I would have a very hard time sleeping at night. And I know there's some people in this space that do have a hard time sleeping at night because they don't know what's going to happen tomorrow, right? And I know with COVID-19, it's had a major impact on some of the lower end properties, the lower end B and C class properties, which thankfully the majority of our portfolio is a B to B plus, and even an A in the A class space.
Yeah, that's awesome. Thank you for the insight, and just a lot of nuggets. I hope if you haven't been taking notes, you rewind it and pull out the pen and pad, and if you're a new operator, new syndicator, it's great items. And if you're a passive investor, a lot of good wisdom. So first, before we wrap up, let me just make sure, Dan, if somebody wants to get in your world, they want to, take the first step or, make the 100th investment, how do I reach you? How do I get in your world?
Sure. I would say there's two ways. So if you're a passive investor and you're interested in possibly joining us on one of our future projects, you can go to passiveinvesting.com. On the top right-hand corner of the page, you'll see a button that says join the Passive Investor Club. You can click on that, fill out the form. My assistant will reach out to you. We'll schedule a one-on-one phone call with you to discuss your investment goals to see if you're the right fit for our group, because not everybody is the right fit. And we'll kind of tell you a little bit more about what we do and how we operate. And then if you're on the active side and you want to learn a little bit more about multifamily and maybe follow us on some of our weekly webinars that we do, you can go to multifamilyinvestornation.com and you can join our email list there. And every week we send out an email alerting you of the next webinar that's coming up. And you can also go to our YouTube channel. And on our YouTube channel, we have a lot of our prior webinars on there. And then, of course, I'm always usually on LinkedIn as well. So you can join me on LinkedIn too.
Awesome. Thank you. And, I wanted to make sure I pointed, as much exposure back to you. So pause for that. But coming back to a couple of things you said, I heard if you're a new investor, you should invest passively. You should look for teams that are really engaged in the business and your hard-earned money there. Dan, I heard it. You got started as a co-GP. So for those of you that aren't, really understand the world completely yet, a co-GP, hey, you partnered with another general partner, and both of you guys, or three, or however many people are on the team, are all partners in their own individual rights doing those deals. And then at some point he came to being able to do the deal on his own and his company and launching that, and then building amazing platforms. And then the scale just is off to the races at that point. And you've had a tremendous career, and I look forward to it. And I'm excited to implement as much as I can. I love the I do the same thing. Invest passively, co-GP, and me and Dan were talking, and we were like, well, which deals are you in passively? And I'm like, well, I'm only in like 800 doors, and I'm 400 passive and 400 active. And then it's like, which deals? And so it's kind of funny hearing that how small the world is, that we have the opportunity to be partnered together on a deal. And I think that's awesome. That's That's actually this one right here. That if you see
Yep.
that picture, man.
But
But
that's it.
excited, and just thank you very much for the opportunity. Is there anything before we go? Is there anything else that like I didn't touch on? We didn't hit on anything? You want to share last nuggets of wisdom or anything that you're working on today that you want to highlight? You just pretty much last things that I didn't hit on.
Well, like I told you in the agreement, there's a lot of things I'm always working on. Some things I can share, some things I can't share, but we're always finding deals. We're always looking at deals. I mean, right now we're I don't know if we're at the tail end or the middle end or where we are with COVID, but we're obviously in August of 2020 recording this. So in July, we started to have quite an influx of deal flow finally, since we've had several months of kind of a dry spell of any really good solid deals coming through. So we have quite a few deals that have come across our desk, nothing finalized or solidified yet, but we're always looking for the next deal. And, obviously from the education side of things, we've got, several things that we're usually cooking there, and I'm looking forward to following you as well, because you're growing on leaps and bounds and doing some really major things. And you've really built out the authority platform that you've done here and been consistent with it. And that's the key, is being consistent with whatever you start with. And that will eventually, whether it takes 6 months, 9 months, a year, it'll eventually come around, and that content will start to generate more and more content. I still today get people, emailing me and texting me about videos that I did in the very beginning when I first got started. Like, I watched this video. I'm like, that was like 2 years ago, but that's what they call an evergreen piece of content, and that's what we have to start generating.
Yeah, love it. It's so encouraging. And if you're not investing in multifamily today, if you're still stuck in single family, if you're a W2, like a high W2 earner, a working professional that's trying to figure out what to do, reach out to Dan, reach out to me. I'd love to open up conversations. And my name is Abel Pacheco again. I'm at 5 Talents Commercial Real Estate. This is the 5 Talents podcast. You can reach me at 5TCRE.com. That's 5TCRE, like 5 Talents Commercial Real Estate, and love to, network with you guys. And Dan, thank you very much as always. It's been amazing. I really appreciate it. I'm humbled and grateful.
Thank you so much. I really appreciate it, and a real honor to have me on.
Yes, sir. Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.